Hey guys, welcome back. In today's episode, we're going to talk about 10 common mistakes that traders make. And I'll tell you what, I'm super excited about this episode because between the YouTube videos here and the Trading Coach podcast, I've got over 1,000 pieces of content out there, and some of the mistakes that we're going to talk about in today's video, I've never mentioned them here on podcasts or YouTube platforms. So I'm excited about that. If you guys are new, by the way, my name is Akil Stokes. I am a professional trader. I started trading in 2007. I did a little money management. I started coaching in 2012, and this is a weekly video that I do here on YouTube, giving you some insights and some tips on how you can progress in your own trading journey, and of course showing you some of the top trades that are on my radar for the week ahead. So the topic for today's video comes from a trader that I've been working with for a little bit now, and he shot me an email just updating me on his progress, and he says, hey, at the moment my equity curve, or my return on investment I should say, is up 42% since I started on January 15th. Whoa. He goes on to talk a little bit about how it's gone through the ebbs and the flows. It's not 42% straight up. He's had good periods. He's had bad periods. He's had periods of sideways consolidation, you know, the huge, right? But then he goes on to talk a little bit about the mistakes that he has made. And he says, I noticed that I've been making, despite being very happy with his returns, I've noticed that I've also made a few mistakes. And this kind of piggybacks on what I talked about earlier, where despite many traders will have a 42% return, they'll be excited about that and they'll think that nothing is wrong. This trader is determined to achieve perfection, whatever that means in trading, or I guess it does mean something. It means perfection is 100% following your rules. He's still looking to grow and get better and understand, hey, this is great, but how can I be even better? And again, that's a very good quality to have. And he says, I noticed I was making a few mistakes. One, not following my rules. That's a no-brainer. I feel like we talk about that every time we talk about trading psychology, right? You have rules for a reason. Those rules are meant to produce you the most amount of profit possible. Follow them, right? Why not? Two, trying to anticipate the trade, not waiting till the bar closes. And this is a tricky one. What we mean by anticipate the trade is, often you should have a reason for entry. Sometimes that reason for entry is something aggressive, just like a limit order or a stop order in the market, where once price hits that specific price, you are filled. Other times you're looking for confirmation. So maybe a specific candlestick formation, maybe a specific pattern formation. You're waiting for the market to close, complete whatever that may be before entering the trade. And that can be kind of tricky sometimes because if good trades don't come too often. So if you have a good trade and you're watching the market kind of, give you almost everything you need to take that trade, and you're looking at your watch and you're saying, oh man, I want to take it, but I can't take it until the candle closes. I have one more hour and the trade's going to go on without me, right? That's typically the fear, right? FOMO, fear of missing out. It's very easy to say, I'm just going to get in early and push that button. And what happens from time to time is you do that, and then, price moves by the end of the close. You don't end up getting the close you thought you would have. So therefore, you never get a signal, but now you're in a trade. And of course, you don't exit because you're stubborn and you want to make the money back, and it typically goes against you. So waiting for confirmation, don't anticipate the move. Wait for your reason for entry. That is key. Number three, trying to make the markets do what I want them to do. And this is another common one as well. We make a lot of predictions in the market on a daily basis. And the truth is, especially for you guys that are new, most of those predictions will never pan out. I'm not saying that they're going to be losing trades, but you'll be waiting for a specific thing to happen. The market will do something else. And that can be very hard to deal with. It feels like you've done a lot of work for no payoff. So, not kind of, understanding and reading what the chart is telling you versus what you want the chart to tell you is a key thing. And those are three common mistakes that I think all traders make. And now we're going to get into the kind of the newer ones, the ones that I don't really talk about here on the platform, or here on YouTube, I should say, but we talk about it when traders are making that transition to live trading. And he says, those mistakes were minimal, right? They were like 20% of my total mistakes. My biggest mistakes were technology ones, right? My worst trades were the following, and I'll name the first three because these are all kind of in the same category. One, my computer restarted while I was sleeping. Two, a power outage while I was sleeping or when I was home. And three, entered in a trade while I was traveling. I didn't know that entering from the web software, my orders were not saved on the server. So in that case, I need to be connected all the time to my device to execute the orders. And this is a big one, right? And not all of you guys are going to face this, but you need to check with your platform and your broker how your trades are held, right? There are some platforms and brokers that hold it with the server. This is preferred, meaning that once you enter a trade, it's locked in with your broker's server, right? Meaning no matter what happens at your home system, the orders are still there. Your entries are there, your stops are there, your targets are there. But not everyone does that. If you're using a web-based platform, or if you're using a broker that gives you the option and for some reason it's defaulted to not holding on the server, you can get into a lot of trouble because that means that if your computer isn't up and running, those orders aren't going to exist. And that's something that happened to me often in my early parts of my trading career, where I just never used the option to keep it with my broker server. So it was all on just on the web. And there would be nights where my computer would do those updates and restart. There would be power outages, and I would have trades that disappeared, and I would often wake up to targets that should have been hit that weren't hit because my computer was off and it didn't trigger. I would wake up commonly to stop losses that didn't get filled, and waking up to the market stopping me out for maybe 2-3 times what I was supposed to get out for because that stop loss wasn't on the computer because it did a stupid update at 12 o'clock in the morning that I forgot about, and that order disappeared because it wasn't on a server. So again, to solve this, you can check to make sure with your broker, hey, where are my orders saved? Are they on a web? Are they on a server? You can get a virtual private network as well, VPN. That's gonna solve all issues. That way your home computer doesn't need to be on. But these are tricky ones. They don't seem like a big deal, but they actually are, because this is affecting your P&L. This is affecting your winners. This is affecting your losers, and that's gonna affect your bottom line. So those are 3 very important things to worry about. Number 4, entered a trade from my cell phone. He says, never again. Number 5, pushing new buttons on my software to see what happens while open trades are running. He laugh out loud. I'm an idiot, I know. Number 6, configuration of stop loss triggers were wrong, so the stop loss didn't move where it should have, like an automated trail stop, something like that. And number 7, several times, like 10 times, price went to 95% of my target, retraced back to my stop loss, and I called the trade, right? I exited early. And we talk a lot about demo trading, right? We talk about the process that we teach here at Tier 1 Trading is you learn strategy development, you back test, you demo trade, you live trade. And there are mixed opinions about demo trading. Some people feel it's pointless because they're like, Akil, demo trading can't give you the same psychological effects as real trading. And no, it doesn't, right? There's nothing like trading live money. I spoke to a trader earlier this morning who just got to trading live money. He's like, oh my gosh, my heart has never beat like this in my life when I was on a demo account. But one of the benefits of a demo account is you're practicing, right? You're practicing, especially if you're on a newer platform, you're practicing how to use it. How do I put stop losses on? Are my trail stops working correctly? What happens if I push this button? What happens if I do an OCO? What if I forget to do an OCO? What if the default is on end of day and my orders are canceled when 5 o'clock or whenever the close of your market is and they disappear? This is your opportunity to learn stuff like that. I'm a sports nerd, so I always relate it to like a sporting event, right? Your practice is your learning and your strategy development when you're putting in plays and implementing stuff like that. Your demo trading is your preseason. That's when you're playing games, but they don't really count against your win or loss record, friendlies. But you're using that as an opportunity to implement what you learned and worked on during practice and use it in a live situation. And we know that live situation is different. And you want to be fully prepared before you go live. As my partner Jason Greystone says, there's no need to ever prematurely lose money in trading. The steps are there so that you can go through the right steps and be fully prepared before you ever trade live money. So just to finish off this email, he says, you can imagine these issues never appeared in my backtesting. If I take out the 7 mistakes from the actual results, which are really easy to get rid of, my balance would be about 60 to 80% bigger. So you can see that these are having a massive effect on this trader's bottom line. So I know that we have a lot of new traders that watch this channel. We have a lot of new traders that are on the tier 1 platform right now, and you're not at the point where you're trading demo or trading live, but this is something that you want to remember going forward. Again, the point of having a coach and a mentor and a community of people that have done what you're looking to do is so that we can minimize the learning curve for you, right? Someone wrote this the other day about what's the point of coaching, and the response was, coaching is to allow you to progress faster than what you would without coaching. So by me sharing all of my all of my stupid mistakes and dumb things that I did, hopefully that makes your journey quicker. By people like Roberto, this trader, sharing his mistakes, hopefully this makes the next trader who's listening and taking notes, hopefully that trader is writing this down, and when they get to that point, he or she is not going to make those same mistakes either. And if we keep progressing like that and kind of sharing our experience and sharing our knowledge on what we have done, what doesn't work, what does work, we can reduce that learning curve and we can help people reach success a lot quicker. So that's the ultimate goal. Now, what you came to see, what many of you guys came to see, many of you love this part. This is these are the real nuggets that you get. But a lot of you also like seeing the charts. So let's hop into the charts. Let me show you some great trading opportunities that are on my radar for the week to come. All right, guys, so before we hop into the charts, I'm going to give you a quick update on how the year has been for me. If you're new to the video, it's not just psychological tips, it's not just technical analysis, but it's a walkthrough of trading and giving you a realistic look at what the reality of trading looks like. It's not just all wins, it's not just all losses like what you typically hear about on social media. It's a combination of both, hot streaks, cold streaks, and times where you're just stuck in the middle. And stuck like Chuck, that's where I've been for the better part of the last 2 months. As you see, I've been in this sideways consolidation with my equity curve. Now, to be honest with you, I'm a little bit frustrated. It's not just because of the sideways consolidation. That can wear on you, but I've been through worse. I've done this for 20 weeks before, so I'm kind of numb to it. But it's really that I'm close to breaking out of it to the upside, but I haven't. And over the last 2 weeks or so, there have been 4 would-be winning trades that missed my entry by a few pips. So a couple pips away from me being involved in making profits on those trades. There have also been a few, or I guess a few of the winners that I have had, I've had to manage the profit targets, meaning that I ended up collecting a lot less than what I initially planned when taking the trade. And it's frustrating because obviously if those things would have played out perfectly, it would have been a very nice extension and a nice breakout out of this high and tight flag. But we know that the markets aren't perfect, and that's the type of things you need to deal with as a trader. The key is, as we talked about earlier, you can't let those, you can be emotional, yes, but you can't let those emotions cause a reaction, because as soon as you start getting frustrated, as soon as you lose your cool and you start making mistakes based on those occurrences, that's when you ruin your long-term projections. And trust me, that's something I've learned the hard way throughout my career, and that's something that I never want to do again. Now, hopping into the charts, we have a lot I want to take a look at today. We're going to start on the Euro Yen. This is going to be the weekly chart. We're going to stay mostly on the daily chart this week, just because Friday hasn't closed yet. And I want to give you guys some longer term projections. And obviously, if you're on the platform, a lot of this is going to be review, but review never hurts, right? So Euro Yen, you can see here on the weekly, we've basically double topped around the $1.30 level. And what I'm looking for is a breakout at this level. This is a double top. It's a nice double top, don't get me wrong, but we're not really at a level of significance in my opinion. I do think we can push higher. If you look at the weekly level, right, there's a nice zone. I'll draw a bigger zone and a smaller zone. There's a nice zone about right here that I think we can travel to. That's going to be between 131s and about 133s, and more specifically within that zone, right, probably about 132s, I would say the midway point, is going to be the level that I think we can travel to. So as we go down to the daily, we don't have confirmation yet, but, oh, hold on, little guy broke in. Hey, buddy, that's for me? Yeah. Thank you. Is that a bill? Yeah, it's a bill. The bearer of bad news. They send them in with a cute face. Give me a second. I feel like I'm getting subpoenaed. They sneak it in there, and as soon as you touch the letter, then you got to pay it. But anyway, so Euro Yen, you can see we're trading at about 130.50s right now. And if you look at that target level we talked about earlier, the lower end being 131, the higher end being 133, the midpoint right in the middle would be about 132, which I think we can get to. There's about 150 pips of potential profit to the upside. And I know there's a double top on the weekly. I know you can see this as a double top on the daily, but here's the thing. All right, I say this all the time about the markets, right? Good moves don't last, very similar to real estate. And if there was a lot of selling pressure at this level, we would have seen the buyers reject it at the retest of that structure, and we would have seen a move downward. What has happened here on the daily is we had the initial move down from the first top, which is, I'll give some arrows for you guys, right here. And then we came up and we saw no reaction, and the buyers are maintaining this level. Yes, they haven't been able to push it up, but they fought off the sellers who are trying to push it down as well. And typically when you see this, it allows me to make the prediction that the buying pressure is going to outweigh the selling pressure. And once we break, or if we violate that level, we're going to see a big pop to the upside. So keep an eye on that next week. If you're a continuation trader or a breakout trader, a move to about 132s on the euro yen here. Next, we're going to take a look at the dollar yen. Dollar yen has made a pretty significant move to the upside this year, really since January 21. And you can see that we've recently come into a previous level of structure. We actually have overlapping levels of structure over here looking left. And two things that I'm looking at here is, one, that the last extension was very short, right? If you're, Elliott Wave fans, you'll be big on this. But if you understand just how a trend works, the longer the extension, the stronger the trend. The smaller the extension, it's a sign of a weakening trend. And with Elliott waves, usually the middle leg, or that middle wave, is the biggest one, and then you get a smaller one, which is followed by either a complex pullback or a reversal. And you can see after our last period of consolidation right here, we had a small little extension up, and this is small in comparison to the previous one, and we have a deep retracement back down. And again, that's a combination that signals a potential reversal in trend. Something else that may give us a potential reversal in trend here is going to be the fact that we're almost complete a head and shoulders pattern, right? We have an initial move up right here. We have a retracement, right? This is going to be our left shoulder. This is going to be our potential head. We're working our way back down to the neckline, which is the previous level of structure looking left. And if we pop back up here, we're going to have a right shoulder. And a head and shoulders pattern is a classic reversal pattern. It comes at the exhaustion point. Sorry, I can't talk today. I can't talk every day, any day. There we go. Perfect example. Shut up, Akil. It comes at the exhaustion point of a trend, and we typically look for a move to the downside from there. So something to keep your eye on here. If we do move to the downside, two levels that I would have on my radar. I'm going to take a Fibonacci retracement tool from the swing low to the swing high, and I'm going to look at the 3D2 and the 50% level. So I'll draw a straight line there. You'll see where they line up with structure. Here's our 3D2 Fibonacci retracement, right at a previous level of inside structure looking left. Here's our 50% retracement as well, lining up with a previous level of inside structure looking left. If we take one more to 618, this is going to end up at our most recent level of structure, or inside level structure here as well. That's a little bit of a reach for me to go down there, but definitely right around 108s, 107s, I think we can definitely travel to if this head and shoulders top completes. Now, one more thing for you guys that have been following along in the live room, we also have a rotation in that RSI, right? So if we go ahead and draw our thirds on here, right, and just draw a few lines, give me a second. We're going to make this 66.7. We did this 2 weeks ago in the video here on YouTube as well. We're going to make this 33.3, right? You can see that we've gone from this bullish trend, right, traveling above this this bottom line. And then what do we just do on this pullback potential retest of a neckline? We violated that 33.3 level to the downside. So we're in that bearish rotation. If we do get a right shoulder, we're going to look for that pullback on the RSI to stay below the 66.7. If we do that, we're going to remain in that bearish rotation. Another sign, or another, not signal because it doesn't mean anything, but another something else we can use as confluence to build our case that we're likely to move to the downside. All right, next we're going to head over to the Euro New Zealand. We're going to get a little bit simpler. Gave you guys some price action stuff. Let's go to patterns. Maybe patterns aren't necessarily simple. They're simpler in as far as the analysis goes because we're just drawing out Fibonacci's. But this one's actually going to be combined with price action analysis as well. So what we have here is a potential Gartley pattern. I'm going to draw this. I'll just draw kind of the ending of it out for you. I'll draw this 127. Pardon the noise in the background. My kid's on recess right now in his school. X to A, A to B, B to C, C to D right here. That's going to be your potential bullish Gartley pattern. Now, what I want you to pay attention to is the bigger picture here as well. If we bump out to the weekly, right, just imagine where that pattern's at. But look what we've recently done on the weekly if we scrunch up our charts, right? We have, right, We've rallied up, rallied up, rallied up. We found a pretty nice level of structure support. If you're over on a Ninja Trader chart, you're going to see a big VS1 level down here as well. But we found a pretty nice level of structure support right down here. And at our last test of that level, look what we did, a very nice pin bar. We go back to the daily and we've had a little bit of a rotation there as well, right? This is going to be our low. This is going to be the retracement from that low. We come back down again, and then we make a higher high, higher close, not just above this high, but this high as well, giving us a little bit of a rotation. So we actually have a Gartley pattern that could be in line with a potential counter trend reversal trade as well. So if you're a CTS trader out there, combined technical score trader, you can give yourself points for the Gartley. That could be used as a reason for entry. This can also be looked at as a structure trade or a normal price action trade too, with the Gartley pattern as confluence. All right, next we're gonna look at the NASDAQ. This is gonna be simple. This one may change a little bit. Again, it's only about 12:30, so there's plenty of time before the close of the day. But we're looking at a violation of these highs, right? If we get a violation of these highs, a break and close above, this is the weekly, so we gotta wait till the end of the day. That's gonna allow us to make the prediction, or I guess identify that we have a higher high, higher close, and then predict that price is likely to go higher. And that's gonna allow you to set up yourself for either a breakout trade if you're a breakout trader, or start looking at areas of what you can look for as far as a pullback trade. If you guys aren't familiar with what a pullback trade is, it's basically after the market comes, makes an extension, it's your little areas of relief like this, right? So relief right here, a pullback, a pullback, a pullback. If you're a trend following trader, these are the areas where you're looking to get involved at a much cheaper price. Now on the daily, what we had here, and again, I don't know if this is gonna still be relevant by the time the video comes out, but we had a little bit of a consolidation here, right? We had a little consolidation right after a violation of this level. And again, this is just like we talked about with the Euro Yen. This is a very good sign of a potential breakout. And what this can also be used for is in the future, let's say we do break out to the upside, this previous level of consolidation would be an excellent place to look for that pullback to come to, give yourself the opportunity to purchase for cheap down here, and then ride that next wave up. So again, we don't know what's going to happen here, giving you kind of an early look at it, but hopefully it'll allow you to be prepared for next week.